All right, welcome back. A lot of people have missed this rally from our April lows. Some of them are professional hedge fund traders that should pretty much have known better. But it's hard not to get sucked into that negative rhetoric, right? We have a classic setup here of current earnings reality versus the mainstream media fear-mongering, right? They're good at that. Our next guest frames it up pretty nicely. He says roughly 98% of the S&P 500 companies have reported. And what has been the outcome, he says? Well, how about this? 64% of them beat on revenues. 78% beat on earnings per share, a blended earnings per share growth of 13.3%. That's the second straight quarter of double-digit growth. Need I say more? Now, here's the rub, though. Simply put, the street got it wrong again. Companies are not just surviving, they're thriving, he says, those are his words. We're seeing serious traction on both operational efficiencies as well as top-line sales. Now, let's get him on to walk us through a lot of his thought processes. I think they make some pretty good sense. Please welcome to the show, Mr. Keith Fitz-Gerald. Keith, thanks for coming on. Great research as usual. I love your notes. But it looks as though, I just got done saying this. I think you know Eddie Gabor. He was just on before you. I just got done saying this, that, I bought some stocks in March and April, end of March, early April, when all the kerfuffle was going on. I don't know if I would have been sitting at home staring at a TV or looking at my screen. I was actually out on the stump. I was given I had a lot of speaking engagements at that time. And I was just cloistered in my car. So I didn't have a lot of noise, a lot of that negative noise that you're talking about in your research. So it seems as though that noise got to some people, didn't it?
Well, it got to a lot of people, and it most interestingly got to a lot of people who should have known better. And the interesting part about that, right, is the markets, people think the markets are all about numbers and earnings and data and this and that. They're not. They're really about psychology. And increasingly today, if you understand the psychology of what's happening, you can get ahead of it.
Yeah, and so all I was doing was saying, allocate this to that, make, take some money off the sidelines, put it to that, because it just seemed to me to be, it wasn't a black swan. There wasn't any market movement out there that it was just trade policy that really got everybody all up. And I just felt as though that I didn't have any mathematical models. I didn't have all the resources that the Fed or Goldman Sachs or Morgan Stanley has. But I just felt like it was overdone. I just thought this is stupid. And everybody's really getting, really upset about, I thought, which you also know that, our economy is not all buying from China. Right? We have services here. We have, we have a lot of our own economy, right? And so I just thought, boy, this is getting a little bit crazy. And so I stepped in, and it turned out to be, of course, now I'm mad I didn't do more, but it turned out to be okay.
But here's the thing, right? I mean, we're all born with common sense. It just gets bred out of us as adults. And so if you can recover that, you can start to figure out what really makes the world go round. For example, there are, let's give or take, 7 billion people on the planet. So great, you have an opportunity to sell 14 billion pairs of shoes, if you're lucky. But if you're talking about data, we've created 98, 99% of all the data in recorded human history within the last few years, and that's accelerating. So you want to go shoes or you want to go data? I'm going to go data every time, particularly in today's world. So people make the mistake of constantly worrying about what could go wrong. Oh, I shouldn't do that because this or that or this or the other thing. What if you focus on what goes right? Those big themes, that data, that expansion, that engine, the stuff that's moving our world forward. I submit that is investable all day long.
And that's something we said on this show as well. We had to, we were going against the mainstream media about tariffs are going to be bad. What about inflation? What about stagflation? What about recession? And maybe it was just even a viewer or somebody wrote in and said, What if it works? I mean, nobody's ever thinking about the other side of that coin. What if it works? What if we do get to some level of fair trade? We're not trying to punish anybody, but what if these things highlight the fact that it's not fair? And we all know it's not fair, but everybody just kind of put up with it. And lo and behold, I'm not saying it's worked yet, but I think what has definitely been the case is our fears were overblown.
Well, and again, that's human nature. We constantly worry about all the things that could happen when what we should be focusing on as an investor, as a trader, is what's likely to happen. It's the difference between probabilities and possibilities. So you can bet all day long if you want that the sun's not going to come up tomorrow, and maybe you make a buck or two. But you know what? At the end of the day, I'm going to bet that it is coming up tomorrow. I'm going to work on making it a great day. I'm going to have objectives. I'm going to execute to a plan, and then I'm going to adjust if I need it.
Well, if you make a bet that it's not going to come up and you win, we're all dead anyway, so you don't win anything anyway.
Well, That's the deal. Now, I learned a long time ago from one of my mentors who, I'm just going to leave him out of the name out of it, but one of the greatest, arguably, investors ever to play the game. And what he said was very simple when I was a young man. It just got through my thick skull somehow, right? I mean, I have 3 brain cells. On a good day, they work together.
Right.
He said to me, he said, look, he said, when everybody's on one side of the boat and everybody knows something, then it makes sense to take a look at what's on the other side. Now, you don't want to be a contrarian because that's taking risk. But if you can take smart, intelligent bets based on the fact that everybody knows something and the herd is almost always wrong when they do, odds are you got a pretty good investment on your hands.
You know, that reminds me of, I'll say a similar story, something, you know, a lot like that was, this is back when we stood in a trading pit, right? And anybody that wanted to be long, whatever you were trading was long. And we were waiting for some government number to come out at, say, 9 o'clock in the morning where the bell goes off and you get the number. And it's a feeling you get standing there thinking, okay, we're all long. The number was bullish. But then the market starts to tail off because it wasn't bullish enough to bring in new buyers, right? And I don't know how much money I lost in my career getting used to that fact that you're dead right. And that's I don't want to be dead right. I want to be alive.
I want to be profitable
long and make some money, right? That's all. And that's the problem. You're standing around looking at all these other guys in the pit. You're like, okay, the first one out is going to be the person that saves his hide, and everybody else after that is going to lose money because you got what you wanted. It's a bullish number. We're all long already. But it's not bullish enough to bring new buyers to the market. And those are the kind of things that mentors tell you. And a lot of times, again, good example, April 8th, April 9th, April 10th. Yeah, it's pretty bad, but do you want to sell it down here? I mean, what are your odds, right? What are your odds? You know, those types of things come back in your brain, of those old those lessons that you were taught by those people that were important to you back then.
Well, and we also know too, right? Common sense being what it is and human nature being what it is. What's the first thing you did when your mom said, don't touch a hot stove? You touch the hot stove, right?
Yeah.
I mean, I did with both hands. And lots of people do that.
I actually had the coil burned into my hand. I had to go to get, the emergency room to get it, get it all wrapped up.
But the point is, investing is all about the psychology of the market, particularly right now. So here's my plan. It's very, very simple. You stick to companies making must-have products and services. Not all tech is the same. Not all companies are the same. So you always go with the best and you ignore the rest. To me, that's a very simple proposition. People say keep it simple, stupid. I say keep it stupid, simple.
Right, and that would have been a fantastic. It still is. I mean, it's being proven. And again, to your point, I think days like today prove you right again. I mean, look, we started off in the red. It didn't look like it was going to be a very good day, and then all of a sudden, people start looking around. Maybe it's because they missed the rally and they need to get back in. They have to participate. They didn't get bad enough news to take the market lower, so they have to get in and buy the market. And here we are. Everything's kind of turned around. I mean, that's another good example of what could happen and what might happen and what is happening.
I would rather invest in optimism than cower in fear any day, Scott.
Oh, my God. End it on that. That's awesome. Thank you very much, Keith. That's fantastic. All right. Keith Fitz-Gerald coming to us from